right, what's good, family? It is your main guy, Ash Cash, the hip hop financial advisor, and welcome to Money Moves Mondays on Hip Hoponomics. Listen, we got a show, but before, I need y'all to like, subscribe, share, do all that stuff. Tell a friend to tell a friend, because today's show is packed with a bunch of information. And so we're gonna jump right into these stories. First and foremost, let's go over what is happening in the markets, right? Because last week was crazy, and so did it continue to go down? Did it go up? Like, what are the money moves that are happening? And so last week the stock market was really on a roller coaster. I'm talking about it was on a roller coaster ride. But despite that, right, despite the turbulence, the year-to-date numbers are looking pretty good, right? They're still looking good. They're still looking strong. The Nasdaq is up 13.40%, and so that's year to date. The S&P 500 is up 12.68%. And even the more conservative Dow Jones, right? Because Dow Jones is pretty conservative. That's up 4.73%. But the real star is Bitcoin. Bitcoin is soaring 38.8% year to date, right? So Bitcoin is up 38.8% year to date. So don't sleep on Bitcoin. But what exactly happened? Well, investors are, jittery about potential economic downturns. So we saw big swings throughout the week. But by Friday, what we realized and what we started to see things settle back to where they were when they started. And so when you think about it, this volatility is only just showing us that even in a generally upward market, right, when things are up and up year to date, there can still be significant short-term fluctuations, but that doesn't mean to retreat. Because imagine if the people who retreated, you realize that loss and not, you can't, ride the waves back up. And so, Larry, let's talk about politics and economics, because that is what is bombarding our timelines right now, and rightly so. Both VP Kamala Harris and former President Trump, they're both promising tax-free tips for hospitality workers, and I know Trump is saying that he said it first. And Kamala's like, nah, we had this too. But here's the deal. They both made these pledges in Las Vegas, Nevada. And you're like, why not Las Vegas, Nevada? It's actually a swing state, where, which means it could go either way. And it has the highest concentration of tipped workers in the country. So that makes sense that they would both be talking to that population, especially in a swing state that could go Republican or Democrat. And so what's the impact? While it sounds good, economists are skeptical about this plan. Why are they skeptical? Because most tipped workers, they actually don't make enough money to pay federal taxes. And so you're like, what? They don't make enough money to pay federal taxes anyway. So why are they saying this, right? The policy of doing this could actually cost the government up to $250 billion in revenue, right? And so what this looks like is a classic case of campaign promises versus economic reality. Let's promise this one thing, but then the reality is, here's what it's going to cost, and it's not really going to save them much anyway. Speaking of politics as usual, and money, there's some drama brewing over the Federal Reserve, right? And so Trump and his VP pick, JD Vance, they're suggesting that the president should have more say or more control over Fed decisions, right? And so Trump claimed that he would have so he believes that he understands the economy better and he'll have better instincts than Fed officials in determining monetary policy, right? And so he is a billionaire, so some people might say, yo, that sounds good. But on the flip side of things, VP Harris is strongly against that. She disagrees, stating that she would never interfere with the Fed's decisions. And this debate is really crucial for so many different reasons, because the Fed's independence is definitely considered essential for maintaining economic stability, right? And so if you want to maintain economic stability, it should be independent, and you also want to prevent political manipulation of monetary policy. And so for those who are like trying to figure it out, I think it's important for us, and if you may not understand, Fed policies, whatever. So I want to break down the pros and cons of the president, whether it's VP Harris or Donald Trump, of having more control over Federal Reserve decisions, right? So I want to talk about that real quick. And so let's start with the pros. What are the benefits of the president having control over the Fed? Number one, it will allow alignment with economic policies, right? And so what does that mean? The president could, with that control, could potentially align monetary policy more closely with their broader economic agenda, right? And in doing so, they could potentially create a, maybe like more cohesive overall economic strategy. So now there's no difference between what their strategy is and the Fed strategy. Number two, one of the benefits of having them tied together is that, there could be a faster response to any crisis, right? And so, sometimes when there needs to be coordination between the White House and the Fed, it might take long, but if the power lies in one hand, it could be quicker responses during like economic emergencies. And so that is another plus of kind of having them together, or having the president have more power over the Fed decisions. Number three, more democratic accountability, right? Because some argue that since the president is elected, having more control over the Fed would make monetary policy more directly accountable to the voters, right? Opposed to appointing somebody who's the Fed chairperson. Another pro of that connectivity is there being potential for a more diverse perspective, right? Because a president might really bring a different viewpoint to monetary policy decisions, and that will work in the country's favor, because as you're potentially aligning challenging conventional thinking that those at the Fed have, it could help balance things out. Number five, and we're going over the pros of the president controlling the Fed. It creates simplified messaging, right? It could potentially lead to clearer, more consistent economic messaging to the public, right? And so you think about this, if the White House and the Fed are more aligned, then there's one, right? What was it? One message, one sound, one band, one sound, right? And so what are the cons? Like what could possibly go wrong, right? What could possibly go wrong if this happens, right? Number one, you can get political manipulation, right? And so there's a significant risk that monetary policy could be manipulated, right? Especially for short-term political gain rather than long-term economic health, right? And especially because the president only serves 4 years, they could manipulate it for the short term. Number two, what could go wrong? What the cons are? Loss of independence, right? As I said earlier, the Fed's independence is really crucial for maintaining economic stability and credibility, right? It has to have credibility in the financial markets, and if it doesn't, right, if you lose this credibility, it could lead to the market instability, and so the roller coaster ride that we saw last week could be more like a permanent thing. Number three, short-term focus, right? Short-term focus. Presidents with their 4-year terms, might prioritize a lot of the things that they need to happen in their administration, right? So short-term economic boost over long-term stability, and then that can have a trickle-down effect to really dethrone America as an economic and financial powerhouse. Number four, you might have again increased market volatility, right? With that one power, markets could become more volatile as they react to political shifts, right? Rather than purely economic factors. And so now money becomes a little more political, and that could really, hurt us in the long term. Number five, a con is that, there's potential for inflation, right? When you look at the history, right, historically, when central banks aren't independent, there's often higher inflation as politicians may be tempted, right, to pursue expansionary policies, right? So policies that are expanding, and so that can really affect the economy. And one of the other cons is you might lose expertise, right? Because right now, Fed decisions are made by economic experts, right? So you have to be an economic expert. And so, when you think about, presidential influence, that could really, undermine this expertise-driven approach. Like we said, Donald Trump is a billionaire, but what if somebody else doesn't have that expertise? And sometimes a billionaire don't mean you have the expertise. And then another one is international credibility. The Fed's independence really gives it credibility on a global scale, right? And so, again, having somebody who's economically sound. And so if you lose this, you could really affect the U.S. dollar's status as the reserve currency, and that would be good for a lot of the, like BRICS, right? Like all these companies or these countries that want to take the U.S. dollar down. Number 8 is a conflict of interest. It could be a conflict of interest, right? With having full power, presidents might be tempted to use, monetary policy to boost the economy before elections, right? And so if they do that, right, so even if it's not in the country's long-term best interest, but they could do that to kind of skew votes right before an election to get people thinking that they're in power. So or they have the economy in the right place. And so, while there might be some potential benefits, to presidential influence, over the Fed, I personally think that the risk and the potential downsides are significant. And really, if I'm gonna listen to the experts, most economists they are strongly in favor for maintaining the Fed's independence, right? And so I would listen to the experts because ultimately what you want to ensure is that the U.S. has long-term economic stability and credibility, right? That's more important than any short-term gain that you would get. And so that's my opinion, but let me know what you think below. Now let's dive into some hip hop business moves, right? Hip Hoponomics. So we want to, jump into some business hip hop or some hip hop business moves. Reports suggest that 2 Chainz was actually scammed out of $1.5 million in a failed weed dispensary deal. Right. So according to the lawsuit, a recent lawsuit that was filed by Antimatter Holdings, which represents the rapper 2 Chainz. They say that 2 Chainz invested in a dispensary called Pineapple Express Hollywood, right? So Pineapple Express Hollywood in Los Angeles, and he invested in this back in, I want to say 2021 he invested, and the investment was made after an introduction by Snoop Dogg's tour manager. So Snoop Dogg's tour manager, made the introduction to 2 Chainz and his team. But even though, that he invested the money, the dispensary allegedly failed to fulfill its end of the agreement. And then, that led to this legal action of 2 Chainz suing the company. Or it being scammed. So on a more positive note, Drake is out here saving soccer teams, and I thought this was interesting when I read it. There's an Italian soccer club called Venezia, and they were actually on the brink of going bankrupt, right? So they was on the brink of going bankrupt, and they needed about $43.6 million to stay afloat. And so Drake and his team really stepped in. They started mobilizing, a group of North American investors. And their goal was, they wanted to raise the necessary funds within 2 weeks. So they wanted to raise, $40 million in 2 weeks. And really, as part of this deal, Drake has a clothing line, a Nike sub-label called Nocta. And it's now the team's official technical partner. And so, this move, I think is a dope move. And the move really showcases how artists could, leverage their influence, right? And like you could start to leverage your influence, leverage your net worth, your network, and then you could do it for philanthropic reasons, but then you could also do it for business purposes as well. I thought this was interesting, right? And so, Jay-Z is being strategic, right? Jay-Z is being strategic, and so Dame Dash owns a share of Rockefeller Records, right? So it's Jay-Z, Dame Dash, and Biggs, and so his share has to be put up for auction, and so Jay's legal team filed a notice, informing any potential buyers, right, that the rights to his debut album, which is Reasonable Doubt, that's what they own the shares in, that the rights of this album will revert back to Jay-Z in 2031, right? Saying that regardless of who purchases, Dame Dash's stake in this album, that it'll revert back to Jay in 2031. And so really this is a standard copyright law. And what it says is that, copyrights typically revert to the original artist after 35 years. And so I think it's a chess move, because by making this public, Jay-Z is potentially affecting the value, of Dame Dash's stake in the upcoming auction, right? If somebody buys it and they know that they only got it from 2024 to 2031, it's going to devalue what he could potentially get on it. That's my take on it. Let me know what your thoughts are. Lastly, let's talk about Novatech. I remember Novatech. It was a cryptocurrency company, and recently the SEC filed a fraud charges against Novatech, and the people who promoted it, alleging that they ran a $650 million cryptocurrency pyramid scheme. My God, almost a billion. Right. And so according to the SEC, Novatech targeted over 200,000 investors worldwide. Oh, my God. Many of them, and this is why it hits hard, many of them Haitian Americans between 2019 and 2023. So this hits hard for all my Zoes out there, anybody, but specifically for my Zoes out there. The scheme allegedly used religious overtones to attract investors. They were promising between 2 to 3% of weekly returns from cryptocurrency and forex trading. And so, however, the SEC also claims that only a small fraction of investors' money were actually even invested, right, in cryptocurrency, in forex, in anything, and what was invested really suffered significant losses, and then instead, what they're saying Novatech did was they allegedly just operated a Ponzi scheme. And what they did was they were using new investors' money to pay back anybody who was an early investor. And so, that's unfortunate, because I knew a lot of people actually who were, in that as well. And it started, the pyramid started to unravel in 2022 when some investors started to experience withdrawal delays. They were trying to withdraw their money and it was delays. And then by May 2023, Novatech shut down. And it was, it left investors, it left a lot of investors unable to access their funds, access their money. This case, man, it serves as a reminder to a lot of us, especially those who are in the crypto space. There's a lot of risk, right? Anything that's new, there's a lot of risk. And it's also is going to tell you that you have to take, you have to make due diligence, right? You have to be thorough and have due diligence before you start investing, because that's really, really important. All right, y'all. So let's wrap this up. What did we learn from all of this on a Monday? Monday money moves. What did we learn? Number one, you should stay calm in volatile markets, right? That's really important because short-term fluctuations are absolutely normal. And even in a bull market, you just got to stay calm, right? Stay calm. Number two, lesson we learned, you have to look beyond political promises, right? And understand the full economic impact, right? Understand the full economic impact of what politicians are offering. Number three, I want you to always do your due diligence on investments, right? No matter who introduces them to you, who's giving you the opportunity, always do your due diligence. Number four, find ways to combine philanthropy work with business growth. Similar to what Drake did with the soccer team. Number five should have been number one to me. No, I'm just playing. Understand the long-term value of your assets, especially in the creative industries, right? Where rights can revert, and so just understand how that works. And number 6, last but not least, be extremely, extremely, extremely cautious of investment schemes, especially those that are promising unrealistic returns, and especially those that are in the cryptocurrency or the Forex space. All right, y'all. So that is all that I have for you today. Money Moves Monday. Make sure you like, subscribe, tell a friend to tell a friend. Remember that in finance and in life, it's not just about making money. It's really about, making smart, informed decisions always. And so make sure you keep hustling. Make sure you stay locked in and keep learning. And I'll catch you on the next episode of Hip Hoponomics with Ash Cash. Make sure that, again, you tell a friend to tell a friend. I'll see you next time in God's will. Peace.